The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks, to the Money Masters Show. I'm your co-host, Steve Rhodes. Tom is out for the morning. He's out buying real estate, and that is a beautiful thing. And if you haven't had a chance yet, folks, to check out the Tiger Real Estate Opportunity Fund, first go to the homepage at tfnn.com. You'll see the bull market and housing under special reports. It's a special report that Tom had put together. Over on the right-hand side, you'll also see the link for the Tiger Real Estate Opportunity Fund. I also believe in the left-hand side, there's a link that'll take you to the website. So you certainly want to be able to check that out. Thanks so much for joining us. It is terrific Tuesday. It is time to get out your vote out there. If we take a look at the markets are voting. You've got them trading up right now. The Dow's up 78 points. The S&P up 6, the composite up 3, small caps up 4.5. Small caps and the Dow leading the charge the upside. The NDX 100 here is struggling. It has turned negative, down $1 and change. Transport's up. New York Stock Exchange up 0.4. The transport strong this morning, actually the strongest, up 0.7% out there. Our call-in number, as always, 877-927-6648. What are these markets doing, folks? Well, they're making, certainly, in some cases, they're making the B to a C of an A to B equals CD down. In other cases, they're just simply going to be traveling up to the top of their consolidation area. We're looking at the New York Stock Exchange first, trading out right now at the 82.79, 82.80 level. That's up about 0.5% here this morning. You can see, if you're watching us on Tiger TV, if you're listening on the radio, maybe you're listening on your mobile device, you can always catch an archive of this show on Channel 10. So if we start off with the New York Stock Exchange, that's a chart you're taking a look at on Tiger TV. You're seeing this little sideways consolidation box. Been traveling in that sideways consolidation box ever since the September 6th date. That was Super Mario Day. The high there, 81.60.56. You'll see a little bit of a gap up. That is still a open window out there. It's a very strong open window, a strong up. You want to understand gaps out there. Gaps are very important. You don't want to fear gaps. You don't want to fear anything, quite frankly. Fear won't get you anywhere. And that gap has held. It was tested, looks like about 3 times out there. Was not able to break to the downside. That says the New York Stock Exchange. To me, it says the New York Stock Exchange wants to travel to, if you can't bust them down, what are you going to do? That's right. You're going to go visit the high side. You're going to try to bust them up. Do I think it can bust it up? No, but do I think it'll travel all the way up there and people will be joyous for a week? Absolutely. That's exactly what the market will do. Be careful, though, out there. I suspect all we're doing is just really going to move up into an area where we're going to see the market sell off pretty significantly. That coming into next week. We'll take things one day at a time out here, but I do suspect you'll see the New York Stock Exchange get up somewhere to probably the 84.20-ish level out there. Let's go take a look at some of the other indexes. Let's go take a look at what comes up first. Let's take a look at the small caps, the Russell 2000. So we take a look at the Russell 2000 index. This has a nice one of Stevie's hammer candles out there. That's this candle as the Russell 2000 was moving down into the October 23rd area. That makes the low of 807.24 very important out there. Why? Because if the Russell 2000 closes below that, and if you are long, I can guarantee you one thing. You are wrong. You never want to see a market on whatever time frame chart it is that you are trading close below a hammer out there. Now, when you close below a hammer, what you need to understand when you're taking a look at the stock chart on your left-hand side is where is going to be the next area of resistance. That's usually going to be a swing point, might be a candle formation out there. So in the case of the Russell 2000, if it breaks that hammer candle, you can see the swing point is really not that far down below August 24th, but it's so close to me that a break of that hammer candle says what it will immediately bring into play is the August 2nd level On the Russell 2000, that would be 765.48. In the meantime, the Russell's going to make a move to its highs out there. The question's going to be, what's it going to do when it gets up to the descending tops trend line? That's where we'll have to pay attention to what the Russell's doing. I suspect the Russell is going to go ahead and break through there, but you can see the Russell here as it got up into the last area of weakness, which was the gap down on October 19th. That high was 832.44, the day of the sell-off last week on Friday, which we expected the sell-off. The Russell 2000 was not able to make it all the way up there. Russell 2000 on its way to 830.55. It's at 823.99 right now. Let's go take a look at some of the other indexes as well. Let's take a look at the S&P 500. Then we'll come back and take a look at the NDX, see what the NDX is doing. A lot of lines out here. If I were you, I'd say, Steve, what are all those lines? So let's get rid of some of these lines out here. Let's get rid of the question is, which one do I want to get rid of? So let's take a look at the NDX 100, the S&P 500. So if we take a look at the S&P 500 index, number one, you're going to see this black horizontal line out there, the long black horizontal line. This goes back all the way to the April 2nd time frame. The high there, 1422.38. This is an old area of resistance. The market here, once it busted through there, moved to the highs that were established on September the 17th. That area should have acted as a sign of support. The market moved down to it, and it was a sign of support for one day, busted through it on October 24th. So this area here, I'm just going to kind of get rid of because it's just simply not acting as support or resistance, so no reason for us to be paying attention to it. So let's get rid of that line. Now let's take a look at what we have here, just like we did inside the, it's going to be easier for me to probably do this, not that. Probably move this line down. I'm going to move the top area down here. Let's take a look at an area that really is support, and that is this little sideways trading range that we're seeing here. And I'm going to put the top line in as well, so we can take a look at where the S&P is likely to travel to. So now what you're seeing is two horizontal lines, just like we looked at inside the New York Stock Exchange. The S&P 500 couldn't bust it down. I suspect that the S&P 500, what it will do is it'll run towards this little, it's going to run towards either the top of that horizontal area, which I could actually see it doing because that would take you into November 13th exactly. So it'll run you right into the apex of that horizontal resistance area, and what it will also be doing, it will be going back and testing that little uptrend line. That's where I suspect that the S&P 500 will give it up. It's just kind of how did that work out, that the horizontal line that I drew there matched up with November 13th, which is a week from today, which is when I'm calling a high in the marketplace, a week in advance. How about that? We'll see how that works out. Let's go take a look at the NDX 100 out here. As we take a look at the NDX 100, isn't it nice to know that that's what you're ahead of time expecting, and then as price moves up there, you don't have to be like a deer in the headlights because you were expecting that. If we take a look at the NDX 100, that is the struggling index out here right now, down 4 points, so not a great deal. What the NDX 100 here is doing, the NDX wants to try to get up into, test the area where it broke out of, which was that trend line, that rising trend line. So where is that going to take you to around the 13th of November? That probably takes you to the price point, I would imagine, right around 27.60. It's going to need to get some legs here. What is it that is holding the NDX down? You've got Apple trading up $1, so that's not helping. Google's off $5 and change. You've got Microsoft up 12 pennies. So the NDX is the weak link out here. Of course, the markets are not going to move that much dramatically higher without the NDX participating. So let's go take a look at Apple. Let's go take a look at the Dow first. Let's go back and take a look at the Dow index. Then we'll go take a look at Apple. Give me a second, window tile vertical. Let's go find the Dow Jones Industrials out here. Come on, where are you? There we go, 120-minute chart. Why do I have that? Let's go to the daily chart out here on the Dow, see what the Dow is doing. So the Dow now moving, I'm going to get rid of this old area because this really didn't, it acted as a resistance level once and didn't really do a good job of acting as support here. So I'm going to get rid of that same line as we did on, I was going to try to get rid of it, on the S&P 500. And what you really have is you've got this little sideways box out here. So let's go draw the lines for that. We're going to come right across about right here, this level. Probably move this up a bit. And really what we're looking at here is that's the low, quite frankly, coming off of the low of Mario Draghi Day, September 6th. So the 13,045 level, an important key support level for the Dow Jones. And if we take a look, you can clearly see the horizontal resistance level up at the top. That would say that you should see the Dow try to move up into the, I'd call it probably about 13,500 level. It's at 13,182 right now. I suspect that what we'll see the Dow do is come up and test also the trend line that it broke through with conviction, really between the October 19th level to October the 23rd. So if we go take a look, now we got to go over and take a look and see what's going on in the currency marketplace, because that's important to be paying attention to. So let's go take a look at the Euro U.S. dollar currency pair. The Euro-U.S. dollar currency pair, you can see it broke through an area that was support. It did that yesterday, trying to get back up in there today. If it gets back up inside there, it was nothing more than just a little bit of a false break to the downside. However, it's important to know that that area was penetrated. That makes that level of support maybe a little bit suspect. I do suspect we will see the euro trade higher. Let's go to an intraday chart, see what we have going on here. Let's go to a 30-minute chart on the euro and see what it is that we have. So we do see it made a little bit of a lower low at 4 o'clock this morning here, but it doesn't have the strength to the downside. So the euro just kind of slowly crawling its way up. To what level would the euro travel to? Well, let's go take a look at retracement levels. Let's go take a look at on the 30-minute chart from the 7:30 a.m. time frame on October 31st. Happy Halloween Day out there. The level was 130.193 all the way down to low of 4 o'clock this morning. So a dead cat bounce on the euro takes you to 129, maybe about 129, looks like 129.86, somewhere right around there, maybe even as high as 129.240-ish level, the 0.618 level on the euro. So I do suspect we will see the euro move higher as well. Let's go take a look at Apple and Google. So let's go see what they are doing here this morning. Of course, Apple struggling to truly find its way. Where is that stock chart? Come here, Apple. It's out there, and I can't see it, so I'm just going to simply add it. AAPL is the ticker symbol. And let's go see what Apple is doing this morning. You can see here Apple really needs to try to find its way as opposed to lose its way. It's really lost its way here this morning, trading down. No really big volume out here. We're going to go ahead down to a intraday chart on Apple. It is trading out at 586.04. Its move to the downside is not done. That is most certain. But I do expect Apple will eventually bounce here. Traded off ever since the open. All it's done is come back and test a little bit of a swing point out here. We get back, 877-927-6648. We'll continue looking at these markets.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. We've got the Dow up 77 points right now. S&P's up 5, and we're taking a look at the DAX over in Germany. So as we take a look at the DAX, trading out at 73.72, that's up 0.6%, out 47 points. And the DAX here is the strong dog in the hunt out here. DAX is making its way back to the most recent swing point high. That is the October 18th level. The low there, 73.89. Let me see if it actually hit that level today. It's gotten up as high as 73.88.98. It's missed it by 3 cents. How about that? It is making its way up there, and the DAX is going to go ahead and try and take out the highs. It's been in a sideways consolidation range, much like as we took a look at the New York Stock Exchange, the Dow, the S&P out there. The only thing that hasn't been in a sideways trading range has been the NDX 100. That's been in a downtrend channel out there. So that is weakness, and it's not really performing very well today also. If we do take a look at the DAX, so all the way back towards its highs, and the question is going to be, as the DAX gets up into the level of 74.47, is it going to take out this sideways consolidation box? I suspect that it is. And it will. What it will do is it will, because a consolidation area, folks, 65+% of the time, consolidations resolve themselves in the direction that they came from. And, so if you understood that, if you knew that as a trading principle out there, that's how you could actually play a continuation pattern. Now, you would play that as a continuation pattern if there was enough upside potential, and you'd have to understand, where it was coming from. And so in this case here, we could actually measure that level. We would just take a look at just simply the most recent swing point below the consolidation. That's going to be August 31st out there, 68.89.79. So I'm just simply using this formation tool to give you an idea of where the DAX, if it can break through that consolidation area, where it would travel to. That would get you up to a price point of about 77.51. It's at 73.72. It's not a trade now because you're in the middle of going up that flight of stairs. It is a trade at higher price if it breaks through that consolidation area. That's if you do the proper reward to risk money management out there, because once you break through it, that would be a continuation pattern in my books. Speaking of continuation patterns, I don't know where that came from, but let's go out to Mark in Denver. He wants to take a look at Chipotle, I believe. Mark, thanks for calling. Thanks for holding.
Thank you. How are you?
I'm doing great. Yourself today?
Great.
I think I asked you that, didn't I?
You're all right.
So, are you looking forward to the election being over?
I am so looking forward to not hearing any more ads.
Oh, I tell you, yeah, no kidding. No kidding. They can't get them off the air fast enough.
Nope.
In my book.
Good thing for DVR, right?
Yeah, exactly. Wonder if there's any sporting events on tonight?
What is it?
Probably
Tuesday?
Some basketball. Maybe some basketball
maybe.
Or something, I suppose. Yeah. You wanted to look at Chipotle. Tell me what you're doing and how I can help you.
Well, I had a great short on that, down from like 335-ish all the way down. I think I got out right in the 295 range.
Okay.
And I missed the big B point break all the way down to 233-ish.
Right.
But I got a good chunk of that.
Yes, you did, and congratulations.
Thanks.
No, we don't want anybody on TFNN ever complaining about making money.
Nope,
okay.
Can't complain about that.
That's a bad thing.
No. So now I'm watching it go back up to test those areas where it broke down from.
Yes.
It's in the gap. The lower end of the gap looks like 283. The B point it broke was 278. So it's kind of right in the it's kind of right around there. It actually got to 280 today.
Yes.
And I'm wondering what kind of more of a bounce we can get out of this to reshort, or if we're right in the spot right now.
No, I mean I wouldn't take it here. Number one, if you take a look at, I'd let it get into that October 18th swing point. So your analysis is absolutely spot on. So that's great. I would, so I guess look, we all trade our beliefs.
Right.
So my belief is that what we're going to see is the markets actually move up into next Tuesday.
Oh, that long? Okay.
Yeah.
Is that because there's a moon or something going on?
There's a new moon that takes place. There's really a number of different cycles. On Tuesday, there's a new moon. On Thursday, there's another 4P index date. There's also a couple of other astro things. There's a number of things going on. I also take a look at, I try to look in advance at the flow of funds in the marketplace by taking a look at a number of different factors that in the commitment of traders reports that the CFTC puts out there. So it's actually a number of things that are really coming together next week that suggests to me that the market wants to turn down then. But stay tuned. We're going to go back and pull apart Chipotle with Mark in Denver. 877-927-6648. You can give us a call as well, folks. We'd love to hear from you. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
877-927-6648. You can give us a call as well, folks. We'd love to hear from you. We'll be right back.
TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Money Master Show. We got the Dow up 63 points, S&P up 3, NASDAQ, NDX 100 still struggling, down 2 points this morning. We're going back out to Denver with Mark taking a look at Chipotle. He is taking a look at trying to find an area to go ahead and short this equity. He did it once and was very successful, and now is foaming at the mouth in order to take the next opportunity out there. So you're trading up at its session highs. We're very close to the session high right now. And I do believe that this wants to run a bit higher with the market as well. And what's nice is that you're seeing it do that with low volume as it comes into areas where it has broken down. So I think the first area for you to consider taking a look at, and is going to be at the October 18th level that you looked at. But that 283.11, which has 2 million shares, is going to be the first area where you're going to get some information. We've only been trading for an hour and 5 minutes, and it's already done nearly 500,000 shares. So to me, it's coming into that area. It might have the volume today as it comes into October 18th to say that it actually wants higher price.
Okay.
So if it gets inside there with volume accelerating, that says that then what I would do is I would start going over and I would go all the way to the area where it last broke down, where it really broke down, which was that July 20th level. Then you're kind of dealing with a price point range of between 307.20 maybe to the 335 range, but it's really at 307.20 where you might get some information, released to you. But I would try to maybe time this, with the market. Now, just because I believe the market's going to turn next Tuesday, that doesn't mean that that's what's going to happen. But I will tell you, next Tuesday is a new moon solar eclipse combination. The very next day is the moon less than 12 hours. After that is the moon at apogee. At perigee. That's when the moon is closest to us. So you've got a real powerful lunar cycle that's going on. The very next day, you've got a 4P index date based on the new ephemeris out there. So there's a lot of stuff in the skies out there that have worked as turning points. That's why I say between next Tuesday and Thursday is where I suspect the market will, seek a high. That doesn't mean that it can't, go down and then go back up. That much I don't know, but I do look at next week as being an important turn point that probably lasts all the way into the Thanksgiving time frame. And then we'll see a little bit of a low and a bounce, and then we see a pretty big sell-off in January. That's kind of my targets right now.
It was interesting when it came down in July. It came down on like almost 10 million shares.
Yes.
And it gapped down, and then it made it all the way back up above that, into the gap, actually. Got over that 10 million share day, which is the high was 335.80, and it got all the way back up to 351, but it never completely filled the gap. I got kind of nervous because I shorted it right when it was getting to that 335, and then it went up quite a bit higher, but then it was on such light volume, I stuck with my short, and then it came back down. So I'm kind of just wanted to be a little more patient this time. Yeah,
and what you do is, the market will absolutely give you the signal. And what you're really looking for is you're really looking for some candle signals. Now, sometimes you have to be creative on how you put those candle signals together, because in the case of Chipotle, if you just traded based on a 1 day, and candle patterns, bullish or bearish, are nothing more than reversal signals. They're either reversal signals. There's really two sets of patterns, candle signals, that are continuation patterns. But for the most part, they're all really reversal patterns. And you have to be creative with regard to maybe how you stitch a few of those together in order to truly give you the signal. Because if you were just basing it on a 1 day candle signal, like a bearish engulfing candle, September 18th, it never gave that to you.
Yeah, that September 11th had a doji. That's right where I shorted.
Okay.
And so, and then that
a
little higher.
And that's a place where you certainly can do that. That little, doji there, is, and a doji is only going to, it only has meaning. This is a Steve-ism, so there's others, people that trade it differently. But in my opinion, a doji only has importance as it tests the resistance area. Otherwise, any other place in the chart, a doji doesn't really have much of a meaning to me.
And that's what it was doing. So, okay.
Yeah, so that, and then you get a close below it, and it's like fall, where the leaves are starting to fall off the tree, and that's in essence what what this equity did here. So I'd watch for some candle signals. You may have to, string a few together out here. But I'm also looking at Chipotle as a short.
Okay, great.
All right.
Thanks for your help.
You bet. Thanks for calling.
Bye-bye.
All righty. Have a great day. Let's go take a look at some of these other stocks here, popping and dropping. Zillow. We haven't looked at Zillow. That is down 18% this morning. Z is the ticker symbol out there. So as we go take a look at Z, and then I got to find that a different way. Give me a second here to pull that up on my screen, which I can do here. Let me see if I got it in here. I don't, so I need to add a symbol here. Z, and we have a Z in the den, I believe, as well. But this is a different Z that we're going to look at. I believe this. Oh wait, why didn't that work? Okay. Back here. Let me upload this. There we go. Now we've got Zillow that we can take a look at. I'll refresh my screen. So this thing is gapping down for sure. But let's go update the screen here, see what it is doing, coming all the way back into where it made its lows. This is an IPO going all the way back into the July 2011 time frame. So Zillow, getting the Zillow knocked out of it. Down with volume this morning, 3.8 million shares. Let's pull this back. Let me get rid of this. Let me pull this back here. So this is taking out a swing point. Its most recent swing point here, I suppose, is the June 13th level. Now, somebody yesterday knew something. This traded down most of the day, and So I believe earnings came out after the bell, but somebody suspected something out there. This showed some signs of institutional selling that began on September 25th. So you can see this equity here had it had a day. If you first take a look at September 7th, so September 7th, there's a high volume day, and on that day, not really wide price spread. If you take a look at this, it's this little red candle right here, but you did have some volume there. So those days always make me say, you know what they make me say, something to think about. It's something to be aware of, especially if you get above or below it on volume. In this case here, your sign of institutional selling took place on September 25th, and you got below that area. So that says to me there was a seller in the equity, not a buyer on that day of September the 7th. So that area gets taken out with volume. You see that you've got some institutional sign. That was really your second sign out there. And you had another sign here on October the 2nd. That was a price level of $36 to $40. That was telling you be careful inside this equity. Today is telling you that this is going to come all the way back probably to its lows in the $21 range to $27.76 right now. That is on Zillow. Let's go take a look at Broadsoft. BFST is the ticker symbol. That is trading down this morning, down about... and there are some stocks just getting taken apart. That is down $5, about 13%. BSFT, then we'll go take a look at a couple of these others that are being taken apart. Now, this equity here, Broadsoft, as we take a look at it, is pulling back with volume, but it's really going to pull back into the area where it last broke out. Now, it broke out on August the 7th, gaps up with 7.2 million shares. We've traded for an hour and 15 minutes, 1.8 million shares to the downside. So it'd be interesting to see if this thing, well, first it will make its way all the way back to, should make its way all the way back to the bottom of the gap, which is August the 6th out there. And Broadsoft it's really in a consolidation. And that consolidation range is a pretty good consolidation range, because you could say it's all the way up at the $41 range, now all the way down to the lows of about $20. That's a pretty good consolidation out there. That is on Broadsoft, but not a great-looking stock chart out here. Let's go take a look at some of these other stocks here that are being taken apart. We've got Service Source International, SREV is the ticker symbol. It's a $3 stock. I don't want to look at that. No, it's a $5 stock. Let's go take a look at it anyway. SREV is the ticker symbol. And that thing here gapping down with huge volume. Oh, okay. So it's a great stock to look at because you can, again, see the signs of institutional selling. So this is what you want to be paying attention to, any of the equities that you might be in. Take a look at this institutional selling. This looks like it's an IPO also going back to March of 2011. And there's not anybody that is happy in this equity. Everybody is in a losing position. How about that? The actual low so far, it's 506. It's trading at 510. There's a few people maybe that have a couple penny profit, but that's about it. So this thing had some institutional selling out here that really began. Let's pull this over here. Let's see what this day looks like. No, it wasn't there. Your institutional selling on this didn't really start in earnest until May of 2012. Went from a price point of $16.77 all the way down to $13.53. Did it with 4 million shares. So that was your first high volume bar on the way down. Here's an equity, comes back and tries to test that level. Gets back there during the middle of July, late June area, and tries to get back up there. It's doing it with 700,000 shares. 687,000, 700,000. That was going against a downdraft of 4.4 million shares. There was no way that was going to hold. We then saw some institutional selling coming in on August the 1st when it has another downdraft with 9 million shares. That one really letting the air out of its tires until today. Already 6.2 million shares to the downside. What do these guys do? Service Source International, SREV. Let's go take a look at what SREV does, or I could say maybe used to do, because they're getting hammered here. Why? Come on, it's loading. So my system running slow out here. We'll come back to, there we go. So these guys are manage the service contract renewal process for maintenance support and subscription agreements for technology and technology-enabled healthcare and life science companies. Well, doesn't sound like a very good business to be in, because they're totally being taken to the cleaner. I think somebody needs to manage their contract here, because they are performing horribly. Let's go take a look at some of the sectors inside the S&P. Why? Because it's trading up nicely, up about 0.4%. The Dow has got the biggest juice, 0.7%. But let's go take a look at the spider ETFs out here. Taking a look at the technology sector. Again, the technology sector, as I was looking at it last night, there was a potential reason to consider the technology sector, with the exception of, it looked like maybe the upside potential here was just simply this downtrend channel that it had been traveling inside of. And you can see that I think that is probably the next area where it's going to release some information to us. The XLK trading out right now at $29.26, but it looks like this is going to run into some resistance as it gets up to the top of the downtrend line. That's probably at a price point somewhere around $29.47 out there. Let's go take a look and see what the XLF and XLE are doing. Looks like I already deleted one of those accidentally, and it was the XLF. So let's go ahead and pull that up on the screen. That's the financial sector out there. So let's go see how that is behaving. A financial sector here trading out at 1608. It has been traveling in a nice sideways consolidation range here for a while. However, it has had a nice little sign of strength here, 2 days of sign of strength, going back to September 13th and the 14th. So it looks like the XLF wants to travel back up into that level of the 14th. 1623 is that low. Its most recent swing point from October the 18th is at 1624. That's what it wants to head to. It's at 1608 right now, because this also has been traveling in a little sideways consolidation box. If those levels get taken out, you can see a pretty decent move inside the financials out here. So let's go take a look at this. Let's see if we can put this apart, or let's see, take this apart here. So if we take a look at the financials out here, let me draw the bottom of this consolidation area. Give me a moment. Sorry about that. So if we take a look at that, we're going to say the bottom of this consolidation area really being, looks like we're probably right around Mario Draghi Day as well. That's at September 6th. So that's going to be the high, which is in the 1553 range. Well, okay, I say it would have a nice move. The real move on this is going to be if it does break through the top of that consolidation level, it's not going to be as big as I thought it would be. What we'd be looking at is the August 30th level. So if you happen to be in the XLF, let's identify for you, if it does break this area, where it's likely to travel to. And that's just simply by coming down here and taking a look at its most recent swing point, which would be not its most recent, but the August 30th swing point before the consolidation level was started. That would say the XLF would be trying to seek the $17 area. It's at 1607 right now. Of course, that would put some pretty decent energy into the markets because of the weighting structure inside the XLF. Let's go take a look at the energy sector, the XLE, and see what that is doing, because between the XLE, XLK, and XLF, you cover a majority of the S&P out there. You see the bottom of the range here in the XLE. You're gapping up this morning. The XLE probably will trade to this descending tops line here. That probably gets you into about the $74 and change marker at 72.35. Dow up 89. Russell up 4.44. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We got the Dow up 85 points right now. S&P up 6. Composite up almost 6 points. Russell up 4. NDX finally turning green out there. And so let's take a look at the markets here today and what you should expect for the rest of the trading session, at least coming into Basil's show. The Dow leading the charge on the way up 0.6% right now, but getting into and being the leader out there, it's getting into that overbought territory. So it could still move a little bit higher. I have good word that the bears are out there. They're building some signs right now. It's just simply what the market needs to do, what the Dow specifically needs to do, is work off that little overbought condition. It can do that just simply by moving sideways or pulling back a bit. Either one of those will work, and you should expect that before it then resumes its move higher. Let's go to Nick in Oklahoma City. Nick, thanks for calling. Thanks for holding.
Thank you for taking my call.
My pleasure. How long have you been a listener to TFNN?
At least 2 years.
Oh, that's great. How did you find us?
Well, I guess something led me to you, one of the links. I can't remember. Maybe
okay.
IDD, actually, yeah.
Oh, great. Okay. Well, thanks so much for listening. We absolutely appreciate it. You wanted to take a look at Riverbed Technologies, I believe?
That's correct.
Tell me what you're doing and how I can assist you.
Well, I'm nibbling little by little.
Okay.
Stock got a little bit hammered.
Yes.
After recent announcement of acquisition of quite interesting technology firm, and now they are being hammered, and I was wondering if it still has time to a little bit consolidate or might start going up.
Well, if we take a look at Riverbed Technology right now, it's traded down to $18.97. And what we were taking a look at, what Nick pointed out, was its most recent gap down on October 31st, moved down with 18 million shares. Now, the benefit there was it was moving into its last sign of strength that had 19 million shares. That was on July 25th, and that area, has held. Now, you got to be careful with this equity because this thing, if it gets below, I don't know where your stop is. If this gets below $17.02, you'll feel some heat, most likely all the way down to $14.34. So that's something you've got to be cautious about. With this thing, and here's the other thing, 1, 2, 3, 4. Okay, so let me give you another area to be careful with. And we're going to go back and take a look at October 31st. Now, the actual close there was $18.47. You're trading $18.99 right now. If this closes below $18.47, anytime today, 1, 2, 3, 4, today, tomorrow, I'm going to give you one more day. So today, anytime between now and Friday, then what this is actually giving you is a signal that it's a continuation move to the downside. You see how you've got this wide range, this bar here from October 31st? And notice that you see how you've got just simply small little bodies traveling with inside this bar?
Right.
If you get a close below the close of that October 31st, usually during the first 2 to 5 sessions, I'm going to extend this just a bit, then what that's telling you is that there is absolutely no strength in this equity, and that you would have a continuation move to the downside where it would be looking to visit that July 24th area. It's very important when you have small bodies traveling inside an area where, in this case here, where it broke down, if you do get it closed below that level, it's just telling you there's no bull. You're the only bull around.
Well,
in the equity.
That's why I was just nibbling on it.
Yeah, so just nibble, but be concerned about that continuation pattern. It hasn't shown itself yet, but I would be concerned to make sure it doesn't close below 18.47 between now and Friday. All right, Nick?
Fantastic.
You bet.
Thank you so much.
Thanks for calling. You have a great day. Stay tuned, folks. Basil Chapman is up next. Victor Jones from 12 to 1. Daryl Martin 1 to 2. David White 2 to 3, Ken Shreve 3 to 4, and none other than the Tom O'Brien Show. He'll be with you today from 4 to 6. Have a great day, folks.